Welcome back, everybody, to the weekend show. While we're breaking down the stock market. So, before we get started, please hit that like button, and that is greatly appreciated. And if you are new here, definitely consider subscribing. And now, let's get right into the market. All right, so welcome back once again, guys. And you can see the Nasdaq was down on Friday, but not by much, even though we saw a gap down and then recovery here in the market. And you can see the memory shortage is shaking Apple and Microsoft, but it is worse for the smaller guys. Despite all that, the market was just packed with volatility. And here's another thing that SpaceX is coming down to earth right now. You can see nowadays this thing is actually selling off from almost or actually from 230, and now it's down to 150. And I think there is plenty of downside left on SpaceX because this is a company not like Tesla. They don't really have any money coming in, especially when it comes to revenue, right? Nothing big coming in. And who's actually going to space? So we'll see how that plays out. But what the market did on Friday, if you look at my screen, we got Dow absolutely flat, Nasdaq down 0.24%, nothing big, S&P flat, Russell up 0.31%. Advancing, we got 65.7, declining 30, so that tells the story here why the market was really choppy on Friday. 11 sectors. Healthcare led the way on top. Consumer cyclical, real estate, consumer defensive, utilities, financial, communication services, basic materials. But look at this. There's a lot of rotation happening, guys. So this is not some sort of crash like everything is selling off. This is one-sided. Who's taking the beating? Industrials, technology, and energy sector. Stock market map, when you look at here, you can see a lot of the names are green. And finally, it's good to see Microsoft and Apple actually getting green day and nice big move to the upside. But who's actually coming down? Some of these semiconductor names and memory chips, right? These were down on the day, so I think there will be some sort of a rotation into the Mag 7. A lot of these names are actually down significantly. And the memory chips, I think these things here, they went up so much, and now it's time to come down. What do we have next week? I think a few things to look at next week. Job opening here on Tuesday, but I think we got Kevin Warsh speaking. Uh, yeah, he speaks on one of these days. I don't know exactly what day here, but let's just see if we can find out. Kevin Warsh speaks. I don't see it here, but this is gonna be a really crucial Joel's job opening here next week. And then ISM also that could move the market, non-farm payroll. But I think Wednesday, somewhere Wednesday, right here, Fed Chair Warsh speech. I don't know what that is about, but we'll see if that brings some volatility here in the market. Fear and greed index. So when it comes to market selling off, when you look at this, I mean, this is kind of weird. This is actually into extreme fear. That means what? You're gonna see rotation, and that's why you're seeing this. Uh, the market sentiment, you can see 45% are bullish, 36% are bearish, and 19%, about 19, are neutral here in this market. All right, so on SPY ETF, it's down 0.72%. But when you look at this candle here, guys, it's, I think this happened after hour. There was some selling, but this level so far holding up. If you look at my screen, that 725-ish here, previous rejection now acting as a support, and we did close well above that level. But one thing to point out, we still have a gap at 743, and we have a lower high, and possibly this is possibly an indication that we're going to make a new low. But I think that is totally healthy. Yes, head, left shoulder, right shoulder, neckline breaking, I see all that. But when the market goes up like this, it can come down. I mean, 700 to 695-ish, I think a really good a pullback, and that's going to open up a lot of opportunities here in this market. A lot of the money that is actually sitting in the sideline, that's going to come in. So for next week, I think there is about $12 plus expected move here on SPY. plus or minus. So we'll see how that works out. But watch out that 725 and the previous low here, that's 723.22 ish. If that's out, we would be coming down here at 716. That is the lower end of the next week's expected move. Underneath that, you're going to see a flush down to 712 to 709 and possibly into that monthly support, which was right about here, 700 to 695. To the upside, if we get a nice, rally, maybe a gap up over 735, these moving averages, market will move up. But one thing I want to point out, guys, yes, the market looks pretty bad, but next week, 4th of July, one of the biggest holiday, it's coming. And typically, uh, in that time, market does not really crash. I haven't seen recently any crashes on 4th of July's. Usually market rallies, so watch out. 735, we gap up over that. There will be a move back up to 739.69 and up to that gap 743.13. Over that, we're going back up to all-time highs. On DIA, it's slightly down 0.29%, and you can see we got an inverted hammer here and then the sold off. But if you look at my screen, that 517.85, we closed right on that 5-day moving average, and you can see also the support holding 517. 6 right here, this previous rejection area now acting as a support. If it comes underneath that, watch out for 513.64, this white line on your screen, the 20-day moving average, that can act as a support. And if that does not hold, we would be pulling back down here at 509 and then 503 into flat 500. To the upside, if it breaks out, we actually made another brand new all-time high, and this was really good on Thursday. I actually got into some puts 520 and I sold into Friday before closing, and this was fantastic. This was a short-term swing trade and immediately paid. You can see I got in at 525, went higher, and then came back in. So Dow just consolidating does not mean that it's going to crash, burn, and go down to zero. Looks really good. We're just pulling back from the highest high. So this thing definitely looks bullish, but we need to hold some of these moving averages right here as a support. So just a quick reminder for you guys, there will be a big sale for 4th of July coming up next week on Patreon. And if you guys are really serious about trading, you want to do this full time, get all types of trade ideas, definitely head over to Patreon, and that link will be down below in the description for you guys. On Triple Q, it's down 1.38%. So Triple Q actually looks really bad, but still, we have not taken out this low down here. That's going to be 686, pretty far down, right? That's another $20 to the downside. And so far, we're just going back and forth, double top, head and shoulder, whatever you want to call it. As of right now, closing right on top of that 50-day moving average, slightly higher, 703. So that's going to be a key support. And then 700 down to that 686, and then these two gaps I think will likely to get filled at some point. If we get a rally, get over 714.55, watch out for a move up to 720, 725 into the 20-day and into the gap almost right here just underneath 735 on Qs. IWM it's up 0.31%, but IWM was down early morning and we took puts on Thursday, just like DIA here, 300 puts, and this one paid. I sold at 296 earlier in the morning, and it was a quick trade to the downside, and then it went back up. I haven't looked at it since then. I didn't really want to go and short again unless it makes another brand new all-time high. So small caps are showing a lot of strength. I don't know what's behind it. Maybe a rate cut, something they know that we don't. But Fed Chair Warsh wasn't really in favor of cutting rates or telling us what's going to be the future holding. So we'll see how that goes. As of right now, 300 holds. We could be going higher, 305 to 310. This thing does not hold here at 300. Watch out for that 296 as a support underneath that 292.88, and then look into this 20-day, which is at 291. We do also have support at 287.49 here on IWM. On VIX, slightly down on Friday, and this thing is elevated over 18. So I would be cautious going in this market. As long as the VIX remains over 18, we might see some sort of a spike back up to 20, 20 plus. And if that happens, there is a little bit of more selling left here in the market before the market goes higher. So VIX elevated. Just keep an eye on that $18 level. As long as we hold that, yes, the market can come down a little bit more. But if this thing breaks down under 18, that's it. Into the holiday, I think VIX will get crushed all the way back down to 16, possibly even 15, and the market will rally back up once again. Quick look at the dollar before we wrap up this video. And the dollar just chilling here right around 101. And you can see intraday, we actually came down here exactly at 101, bounced off of that level, but I think this thing can come down easily down to like flat 100. And if that happens, dollar gives like $1 back. That's gonna be fuel to the fire. You'll see the market and especially gold and silver rallying back up to the upside. And that's all I have for you guys in this video. And I'll definitely keep you guys updated